Hey everybody, good morning, good afternoon. This is Ryan Derks. I wanted to do an end of 2024 review for all of our clients. We've been doing our end of month reviews, but I figured this would be a great time for us to do a full recap of what happened last year, and specifically, is our overall strategy still in place and still working out nicely. So let's get right into this. I have 1, 2, 3, 4, 5, 6, 7, 8, 9. I believe 9 positions we're going to look at. And generally speaking, that ought to make up most of everyone's portfolio. Some of you call and you have your own stocks or so on. But I figured let's start off with the losers first and get into our winners after that, just so that we're not trying to hide or anything like that from our positions that are not the most beautiful. So keep in mind, okay, first off, Hershey. All right, cocoa prices going up by 10x this last 12 and a half months has not helped. Very stable company, still putting out great earnings and all sorts of good financials, but there's a lot of speculation, so their stock price has trailed this year. However, one of the biggest things that all of our stocks have, which you'll see on all these stocks that we cover today, the dividend. Not only do they all have a nice dividend, but it's a growing dividend. You're going to see, watch this, watch as I go over all of these. Hershey announced earlier this year they're raising their dividend by 15%. And look at this, even though Hershey was off this year, those of you who have been with us for a while, we got into Hershey right around 2017, right in this area. We've had a huge appreciation in dividend, so extra interest essentially that we're earning just by holding Hershey, even through their good years, even through their bad years. So it's doing exactly what we thought it would do. United Health, our next loser, and I believe that's all for our losers. Now, fortunately, or unfortunately, however you look at it, United Health was actually doing really well for us this year. It was just unfortunate that that CEO who was murdered about a month ago signified a huge drop-off. We were doing really well on United Health all year, and then they kind of fell off when the CEO, again, no bad news, nothing drastic that should cause the price to drop so much. Hold on, I'm going to turn my video because I have a bad glare. Okay, I hope that's good. But again, they announced an 11% increase in their dividend. So again, working perfectly in line with what we had expected they would. Next, Visa. Visa was a great stock for us this year. Throughout the year, they actually had a huge lead on the market. I mean, heck, right here, even look, the market was down. Oh, excuse me, Visa. Visa had some downtime, but a very, very well-run company. Finished the year right in line with what the overall market did. But what the overall market didn't do that Visa did was increase their dividend by 13% earlier this year. So again, we can see exactly how this is working. Every one of these stocks, almost every single year, they're raising their dividend. And the longer we hold them, the more rocket fuel that's going to add to your growth, the more compounding interest that's going to add. Next, Apple. Apple did great this year for us. I mean, gosh, they've done well nearly every year for us. In fact, at one point, up going into the end of the year, they were ahead of the market by about 10%, but they gave some of that up in the last week. But still, they finished about 8% higher than the market this year and increased their dividend by 4%. Again, Apple, awesome stock that just keeps increasing their dividend. Next, ADP. ADP was killing it for us all year. In fact, if you look right here in this little middle spot, you can see where it was down a lot. We bought a lot of that for clients right there as it was down. And so we've actually gotten a kind of unfair growth right there, which was worked out really well for us. Not only that, but they increased their dividend as well this year by 10%, and it was the 50th consecutive year of dividend increases. So we are so happy with that. And again, you look here, you can see it visually. They just keep doing that, increasing dividends. Ferrari, this is one between Ferrari and Costco. Those are my two kind of favorite stocks at the moment. Ferrari, man, they had such an unreal year. At one point, the market was only up about 15%, and they were up 47%. So like amazing. Now, again, they gave a little bit of that back, but there's nothing bad happening at Ferrari. Again, you guys, stocks go up, stocks go down. That's why you kind of want to zoom out and just kind of compare it that way. But again, Ferrari increased their dividend by 35% this year. Man, we were so happy about Ferrari. So again, you see here, Ferrari increasing their dividend each year for us. Next, Costco. Costco did great for us. Again, pretty much all stocks, if you see this right here, December was not the best month for a lot of stocks. There was just a kind of a monthly sell-off. Nothing crazy, just it happens that way sometimes. Going into December, though, they were up 52% on the year. So finished off at up 39. Again, we're so happy with Costco. And increased their dividend this year by 14%. Now, this one isn't as easy to tell how great they've been increasing their dividend, mainly because they do these one-off special dividends. Their normal dividend is about $1.20 per share. They do these special $15 per share. If you guys go back and look at your December statement for December 2023, you'll see a one-time $15 per share dividend that was deposited into your account. But yeah, you can't really tell how nice that growing chart is. But anyhow, Costco, we're loving Costco. And again, their financials that they're reporting are great right now. And then finally, our last stock, Microsoft. Again, Microsoft had a great year, but nothing that they did incorrect. Again, they just had kind of a floundering third quarter of this year. Nothing bad. Again, let's zoom out. They're doing killer. They just had a bad couple of months. This is what's really tough. Just a little bit of inside baseball for you guys. This is what can be really tough in our job when a new prospect or new client comes on and they say, well, I really want to know, how did you do last year? And how did you do? It's tough because, well, hey, look, I'm going to tell you the truth. We had a ton. Microsoft is one of our biggest positions, but it was down. It trailed the market by a solid 10% this year. Even though going into the first week of December, it was basically neck and neck. But, that might sway someone. But again, if you zoom out, if you know why you own these stocks, not only every one of these stocks we've shown, these are billion-dollar companies. They have a monopoly. They have a moat. They have a very, very dedicated, sticky consumer or client base. So anyhow, Microsoft did not finish the year off as good as it started, or even as good as it was in the middle of the year. Finished off up 12.5%. Did trail the stock market, but again, zooming out, not too concerned. It's Microsoft. I don't think anyone's concerned about them. Plus, raised their dividend by 11%. So we are so happy with Microsoft. And again, you look here, it's doing really well for us. And this is going to be one of those that hopefully all of our clients, die holding on to. You know what I mean by that? So anyhow, you guys, that's about it. That's kind of our end of year review. I just wanted to show you really nuts and bolts of, okay, this is the idea, this is the strategy, but is it actually doing what we implied and what we thought it would? Yes, absolutely. Buying billion-dollar companies that are very sound and stable. They have a huge moat, meaning they can't easily be knocked off of their top king position. They have a somewhat of a monopoly and a very, very sticky and dedicated consumer base. And then finally, they all pay a dividend that's growing. So yeah, if you're growing your interest annually by 10 or 15 or 35%, it takes only some basic math just to figure out that, over just a few years, you're going to get a nice, big, fat return on that. So anyhow, you guys, that's where we are right now. If you have questions, call us. Again, as always, even though it's at the end of this video, this is not investment advice. This is just commentary. So I hope you guys have a nice day, and we'll talk to you later. Bye.